Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. Quite a bit of volatility overnight. All major benchmarks across the globe were down. Ultimately, a lot of selling started coming in as the data from Europe started to miss. But the big misses were the Eurozone PMIs. All three missed. You have as well news from Turkey, Italy, some of the U.S.-China trade talks. A little bit of speculation they're going to see a little bit of a walk back on those. Additionally, North Korea in the news. So the soft footing that we saw the markets, the S&P close on yesterday, continued. We traded down to low 2704, but we're bouncing back. The PMIs here in the U.S. beat, decent home sales, and we're finding this right back into an area 2712, 2716, consolidating ahead of the big FOMC minutes released later today. Now, they didn't hike at this meeting earlier in the month, but they changed a lot of the verbiage in the statement, and we're going to get insight into that, especially the use of the word as symmetric inflation goals. What does this mean? Now, we look at this as dovish. The market didn't take this so dovishly earlier in the month. That statement we felt was dovish. Then you had wage growth missed. You had CPI less than expected. We haven't really seen the data. However, Treasury prices have continued lower until bouncing overnight on that volatility. The dollars continued higher, but really that's more because of euro weakness. So this statement is going to come in the limelight here, and I think it should be pretty interesting if the market takes it for face value, which is that the Fed thinks that the inflation is going to increase and they're hawkish on inflation. We may not get that dovish look, but we think that the use of that symmetric inflation goals in the context of the way they're talking about it in that statement is ultimately dovish. They're willing to let inflation run hot. And what does this mean? They're not going to hike that fourth time as prices and inflation all stabilize and move up here over the coming months. Now this should allow the dollar to retreat from these highs. You should start to see a continued bid that started last night or really started on Friday in the treasuries. This should help support the equity markets. It should help support the metals. So look for all this. We're here to talk about it and help you navigate what you see here or what's coming out. Lastly, we'll touch on crude oil. Very bearish EIA inventory report, a very large build on crude oil, surprisingly large build. But ultimately, it's holding ground decently. There's a lot of support down near $70. We remain intermediate term to long-term bullish. We did start to exude caution throughout this week after our targeted 72.35 has been hit. But we'll look to be buyers on pullback here, especially ahead of the long weekend. So give us a call. We're here to talk about everything happening today. 312-278-0500. You can email us info@bluelinefutures.com. You can as well look for updates on our website and sign up for a free trial of our research. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thank you.